In a stunning market shock, Crocs has seen its shares tumble by nearly 30% in a single day. A dramatic fall that raises serious questions about the brand's future. The footwear giant recently warned investors that upcoming sales could dip significantly due to a combination of rising tariffs, hyper-cautious American shoppers, and a cooling off of the once wildly popular ugly shoe trend. But here's where it gets controversial. Are these factors temporary disruptions or signals of a deeper shift in consumer behavior and trade policy impact? On Thursday, Crocs stock plummeted by 29.2% following a forecast that quarterly revenues might drop between 9% and 11%. This forecast came as a disappointment to market analysts who had been anticipating modest growth. The company also pointed to a forthcoming hit on profitability from a new wave of tariffs. Measures linked to Donald Trump's trade policies that had just come into effect that add further layers of uncertainty to global trade and intensify consumer caution worldwide. This share price decline marks the most significant one-day loss for Crocs since 2011, reducing its valuation to the lowest level seen in nearly 3 years. CEO Andrew Rees explained that there is undeniable evidence indicating that many North American shoppers are exhibiting extreme caution. He noted that consumers are not only refraining from making purchases, but are even avoiding visits to brick-and-mortar stores, largely out of concern over existing and anticipated price increases. Rees described the outlook for the latter half of the year as particularly worrisome, which is clearly reflected in the muted order volumes from retail partners. In today's economic environment, characterized by a cooling labor market, escalating interest rates, increasing inflation, and persistent uncertainty over trade policies and tax legislation, consumers are understandably pulling back on their spending. In fact, similar caution has been observed in other industries. For example, McDonald's recently acknowledged that many lower-income U.S. customers are reducing their fast food purchases as a cost-saving measure. Historically, Crocs was once maligned as a fashion misstep. However, during the coronavirus pandemic, when comfort became a priority over convention, the brand experienced a meteoric rise in sales. Even a flash of high-profile exposure, such as a gold pair of Crocs featured on the Oscars red carpet and celebrity endorsements from the likes of Drew Barrymore, helped propel the brand into mainstream popularity. Just this week, Microsoft added another twist by releasing a special anniversary edition of Crocs inspired by Windows XP, showing that the brand has enjoyed its share of innovative collaborations and cultural moments. Originally designed for sailors and water sports enthusiasts, Crocs products are made from a lightweight, odor-resistant foam resin that later became a staple in the mid-2000s fashion scene. Nonetheless, as appealing as the brand remains with its loyal fan base, consumer tastes are clearly evolving. Rees admitted that many customers are now gravitating back towards athletic footwear, a trend boosted by upcoming events like the Men's Football World Cup and the anticipated Los Angeles Olympics in 2028. On the financial front, CFO Susan Healy warned that the new tariffs could lead to a $40 million hit in the second half of 2025, with an annual impact potentially reaching $90 million, given the company's current sourcing strategy. Rees also highlighted that these tariffs have had a disproportionate effect on the company's casual footwear line, Hey Dude, which was acquired in late 2021. In response, Crocs has been taking serious steps to mitigate the damage, closely monitoring expenses, reducing inventory levels to protect brand